Benchmark crude price is up nearly 19% in the last 2 months, and consumers starting to feel the pain at the pump. I felt a little bit of pain at the pump, actually, on Sunday.
When did you pump? Oh,
on Sunday, I was a little bit surprised by what was happening there. The national average for a gallon of gas sitting at $3.82. It's up more than 8% from last month's average. For more, I want to bring in Tom Kloza, global head of energy analysis at OPIS. Good morning to you. Tom, directionally, between now and Christmas, is it only going up?
No, directionally it's going down unless you get a hurricane. But, you know, that hurricane, if we have one in the Gulf of Mexico, would make a major move higher. So without that, if you could guarantee it, I'd say we're going to be 25 or 50 cents lower. But in the meantime, we're kind of stuck at a plateau here with 6 states paying more for gasoline than they were last year.
What's your explanation for where we are right now?
I think where we are right now is because of the Saudi cuts, you know, 1 million barrels a day in addition to the other OPEC plus cuts. Russia probably not able to export about 300,000 that they would otherwise normally do. And then the other thing that's happened in the last month is the speculators and the traders have come in and they've made some hurricane bets on gasoline. You know, they trade RBOB futures, and we probably have the highest skew of long traders betting on higher prices than we've had in about 3 years, and that has consequences.
Tom, this morning we got data out of China which shows deflation there. It's the first deflationary reading since Japan in 2021 in the G20 countries. We know that China's economy is flagging at this point with no big stimulus in sight. Do you think we're factoring in enough Chinese barrels coming off the market in terms of demand into the oil picture at this point?
Well, China has been, you know, the gun that hasn't fired so far. And you have to wonder about where we might be, maybe in the 90s or $100 a barrel if the Chinese reopening trade had actually worked. You know, the problem isn't even gasoline right now. It's on the other products. Diesel and jet fuel prices are seeing reflation. If you compare the numbers today, the wholesale numbers, to where they were on June 30th, you're up about 70 cents. So it's kind of like playing whack-a-mole with the reflation there. You know, gasoline is up about 20 cents, but the other products that drive commercial businesses and industry are up 60 to 70 cents in about 40 days.
Tom, if we were to go out, I gave you until Christmas, but you think longer term, if we were to look at a chart of the next 3 years, that we're actually going to go down, broadly speaking, and it'll be stable, or you're in the view that long-term things are moving in a totally different direction?
No, I think that long-term, we're not going to pay those $5 gas prices that we saw last year. As a matter of fact, you guys were talking about DraftKings and the betting places. I would bet you in 2 years you'll be able to bet on retail gas prices in the United States. That's going to happen. But I don't think that you can make a case for those $5 numbers without a war or without, you know, it's something beyond occasional skirmishes. There's plenty of refining capacity. There's plenty of crude oil. And I agree with the people who believe that there's enough incentive to raise U.S. crude production to about 13 million barrels a day. And then the additions from Brazil, Guyana, Venezuela, Libya, Nigeria are probably going to make up for that as well.